Wall Street rewards speed. The faster you move, the smarter you look. But one man became legendary by doing the opposite. He didn't chase trends. He didn't predict markets. He didn't try to look brilliant. He waited, and that waiting made him billions. Most people don't know his face, but the people who manage billions of dollars know his name. This is the story of Seth Klarman, the man who proved that patience can outperform genius. Most investors ask one question: how much can I make? Seth Klarman asked a different one: what can go wrong? That question changed everything. From a young age, he wasn't fascinated by riches. He was fascinated by risk. Why do smart people lose money? Why do crowds panic? Why do bubbles form again and again? At Harvard, while others studied formulas, Seth studied human behavior. He noticed something important. Markets are not driven by logic. They are driven by emotion, fear, greed, overconfidence. And emotions repeat.
If you can control your own emotions, you don't need to predict the future.
At Harvard Business School, Seth learned the same theories everyone else learned: efficient markets, models, forecasts. But something felt wrong. If markets were so efficient, why did crashes keep happening? Why did intelligent investors keep making the same mistakes? Seth realized the problem was not lack of information. The problem was behavior under pressure. People don't fail because they're stupid. They fail because they're emotional. That insight stayed with him forever. In the early 1980s, Seth Klarman co-founded an investment firm. He named it Baupost. The name wasn't exciting. That was the point. Baupost means a safe place. While Wall Street celebrated aggression, Baupost focused on protection. While others borrowed money to grow faster, Seth avoided leverage. While others stayed fully invested, Seth often held large amounts of cash. People criticized him. They said, "Cash is lazy. Cash means you're missing opportunities." Seth saw it differently. He believed cash is not trash. Cash is opportunity. Seth Klarman followed one rule above all others: don't lose money. Not beat the market, not get rich quickly, just don't lose. Because losses are asymmetric. Lose 50% of your money, you need 100% gains just to recover. Avoid big losses, and time becomes your ally. This rule made Seth extremely selective. Most of the time he said no. No to popular stocks. No to exciting trends. No to pressure. Sometimes he waited months, sometimes years. Managing billions of dollars and choosing to do nothing. That level of restraint is rare. That restraint became his edge. Markets move in waves. When prices rise, people feel confident. When prices fall, people panic. Seth Klarman prepared for both. He assumed markets would be wrong often, so instead of predicting timing, he prepared emotionally. He knew when fear arrives, liquidity disappears. People are forced to sell at the worst possible moment. That's when patience becomes priceless. While others react, Seth waits. While others panic, Seth thinks. Seth Klarman didn't try to outsmart the market. He tried to outlast it. He understood something most people never do. The biggest enemy in investing is not lack of knowledge, it's lack of discipline. Every market eventually breaks, not because of numbers, but because of people. Fear spreads faster than facts. When markets crash, logic disappears. Investors don't ask, "Is this asset undervalued?" They ask, "How fast can I get out?" This is where most fortunes are destroyed. But this is also where Seth Klarman prepared to act, not with excitement, with calm. while others were forced to sell to meet margin calls. While hedge funds collapsed under borrowed money, Seth Klarman had something rare: cash and clarity. He didn't rush in blindly. He waited for prices so low that even if he was wrong, he would still survive. That was his advantage, not bravery, margin of safety.
Seth Klarman believed one truth: you will be wrong sometimes, no matter how smart you are. So instead of trying to be right all the time, he focused on not being wrong in a big way. He said, "The future is unpredictable. Risk is not knowing what will happen. Risk is not knowing what you're doing." So he demanded a wide gap between price and value. That gap gave him room for mistakes, room for bad luck, room to survive. Most investors hate this approach because it requires saying no, often. In the 1990s, Seth Klarman wrote a book. Not to become famous, not to sell millions of copies. He wrote it as a warning. The book was called Margin of Safety. It didn't promise wealth. It promised reality. It told readers, markets are inefficient. Losses matter more than gains. Most people should not be active investors. Wall Street didn't like that message. The book went out of print. But something strange happened. Over time, used copies started selling for thousands of dollars. Why? Because hype expires. Truth doesn't. As Seth Klarman's success grew, so did the attention. But he avoided it. He rarely appeared on television. He rarely gave interviews. Why? Because attention changes behavior. Once you're watched, you start performing. Once you perform, you stop thinking independently. Seth believed, to outperform the crowd, you must be willing to stand apart from it. That means looking wrong, sometimes for years. Most people can't handle that. He could. People often ask, what was Seth Klarman's strategy? The answer disappoints most. There was no secret formula, no perfect indicator, no shortcut. His edge was psychological. He could wait. He could hold cash while others felt pressure to act. He could buy when fear was unbearable. He could do nothing when nothing was worth doing. In a world addicted to action, that is rare. Seth Klarman never tried to impress the market. He tried to survive it. He understood something most people ignore. Success is not about being right more often. It's about staying in the game long enough for compounding to work. You don't need to be the fastest. You don't need to be the loudest. You need discipline. You need humility. And above all, you need patience. Because in markets and in life, those who wait thoughtfully often win quietly. Survival comes before success. This video is for educational purposes only, not financial advice. If you found value in this story, like the video, share it with someone who needs it, and subscribe for more true market stories.